One of the things that stood out to me is Dara Khosrowshahi saying there is no magic lever. There is no one thing that we can do to get to profitability. You know, the implication there is that it's going to be a lot of things that sort of make up the piece of this whole pie. What is your take on the results we saw today?
Well, I agree with that. I mean, and look, and compare that to what we saw with Lyft, where they said this was a peak year of losses. I think navigating that's important because right now for investors, the focus is on growth, the focus is on take rates and bookings. And the last thing you want to do is back yourself into a corner, talk about profitability levers. It's going to take a few years, and I think right now, you know, they're doing the right things. And at least I view this quarter as a step in the right direction, especially after what's been a pretty shaky start since the IPO.
Mandeep, what is your take on this continued level of losses? And Nelson Chai, the CFO, saying this is going to be an investment year. They're going to continue to invest.
Yeah, and you know where they're investing. They're investing in the food delivery business. That's where they are very heavily subsidizing the drivers. You see that's why the take rates are coming down. And you can see the reason why. The average prices for food delivery business is much higher. You can probably scale it up over time, and that's the one that's most fragmented. Even Amazon invested in a company like Deliveroo, so you know that end market is pretty big, and I think that's what they're striving for here.
Dan, what is your assessment of Uber's ability to get to profitability? And you know, I asked him on the floor of the New York Stock Exchange if this was the peak spending year, as Lyft said on its earnings call, and he wouldn't commit to that. So, you know, how likely do you think it is that Uber gets to profitability in the near term?
Look, and I think that's the smart move because when you look at Lyft, you know, I think that's maybe something they regret saying just because right away it puts that sort of mark up there in terms of what they could do from a profitability perspective. And right now, you know, Uber's doubling down. They need to invest, not just in Uber Eats, Uber Freight, and autonomous. Look, I think in the next 2 to 3 years, better chance of me playing for Golden State Warriors than them hitting profitability. So I think in the next 2 to 3 years, that's kind of what I view as off the table. I think if you look 3 to 5, that's more realistic in terms of where they could hit. But right now, the focus on growth, and especially on international, putting a fence around their backyard and making sure that call it 90 to 100 million users continues to ramp, and they monetize it, especially on Eats.
All right, so I won't be seeing you at the NBA Finals tonight, Dan. You've just broken my heart. But Mandeep, Nelson Chai did say on the call that marketing expenses were going to start to go down. That's presumably welcome news, given that both Lyft and Uber have been spending heavily to attract new riders.
Yeah, and he called out the rationality in the price U.S. market. So basically, Lyft and Uber are not subsidizing the riders anymore. I still feel they are subsidizing the drivers. That's why Uber's take rates are coming down. But I think it makes sense, right? It's a duopoly. We have seen this kind of structure in online travel market with Booking.com and Expedia. And I think over time it's going to pay off in the sense that these guys at least can maintain stable take rates in the core ride-sharing business.
So, Dan, what are you looking for, you know, over the current quarter, which, by the way, they didn't give a forecast for? What's next?
Yeah, but I think it's important on the call. They did talk about take rates and some other sort of metrics they're expecting to improve throughout the year. Right now, it really comes down to that take rate number. You know, can that start to spike back up? What bookings looks like the second half of the year? Do they monetize Eats? And when you look at Eats, especially with the Grubhub, DoorDash, and others, there's definitely a lot of competition there in terms of pressure on take rates. If they can manifest and sort of get through this period, it's an execution story. And no doubt it's in the penalty box as the stock coming out of the IPO. Investors continue to grapple with the valuation, especially with no profitability, even with binoculars. But we believe as they execute, the sum of the parts story, the 100 billion plus valuation, you start to get a stock that maybe gets re-rated there when you start to look out the next 3-4 years. But it comes down to execution. That's why this is such an important quarter. But the next few are going to be laser focus of the street.
Dan, I'm looking at a chart here that takes a look at short interest for the biggest and most recent IPOs, and the short interest in Lyft is way higher than the short interest in Uber. What do you make of that?
Well, I think Lyft right away, because of the domestic ride sharing situation, made it an easier target, as well as just the timing with Uber coming out. And they shot themselves in the foot a little on their first call with not giving take rates, not giving bookings. And the shorts, they've essentially smelled blood in the water there, and that's why you're seeing that. I do think that's overdone. I think Lyft has improved maybe some of the communication they have, at least with investors over the last few weeks. And I think that's gotten a little overdone, but no doubt, Lyft is in the investor penalty box, and I think that's going to be one next few quarters. They need to prove themselves for the shorts to cover, which is why there's so much more focus on a Lyft versus an Uber, at least where we are today.
Now, on the call, Mandeep, Dar really played up this idea of Uber as a big platform that does many things, which means that, according to him, gives it a competitive advantage over a smaller company that does one thing. You could imagine he's talking there about Lyft. But isn't it also a good argument that one platform that does one thing very well could also be a really staunch competitor?
Yes, but again, in this business, in our two-sided marketplace, like Uber, I think it's all about scale and network effects. And the fact that they have 90 million plus riders and they're international, with so many 60 plus countries, I think it plays to their advantage if they can, show steady execution. To Dan's point, it all comes down to how you monetize that rider base over time, how is your driver retention, and if they can show improvement on those metrics, I think it clearly is an execution story, and that's where the parallels to Amazon make sense.